Taking a look at the interest rate environment today, I want to focus on the 10-year note once again. The 10-year note up on the day. We saw a little bit of appreciation here. We're seeing some stabilization in the 10-year note after the selling pressure last week. 123.25. Current level on that 10-year, we saw a high of 123.29, a low of 123.17. So near the higher end of the range for the settle. Central banks in focus today. ECB announcement this morning. Dovish tone coming from Mario Draghi, basically indicating that they do not anticipate raising rates in 2019. They'll re-engage possibly in the early part of next year, but to this point, they still maintain a very dovish tone. They expect to continue to with their long-term refunding plans as well. That was new to the market last month, and the market's still anticipating that, and they didn't change that directive. Also, Fed minutes came out this afternoon, and the Fed minutes, we did see a little bit of a market reaction to those minutes. And the thing I think that was interesting in those minutes was the fact that the Fed, although they did see a sluggish economy and global slowing, and those were the concerns, and that's why they basically indicated that at this point they really don't see themselves raising rates in 2019. They didn't say that it's completely a done deal. They said flexibility is the key here, and if the numbers start to indicate that they have the ability to possibly raise rates by December of 2019, that they will reconsider that at that time. So again, they're going to kind of continue to wait this thing out, patience being another key word in those minutes, and they're going to just basically take each data point as they come in now and evaluate them on a global perspective and as a growth perspective and inflation perspective. Also, CPI data this morning. Headline number a little stronger than anticipated, 0.4, but it's the core number, 0.1, much lower than expected, and we did see a reaction in the 10-year. That's when we saw prices jump up off that number and yields come under some selling pressure. We also have PPI tomorrow. Now the expectations are 0.3% on that headline number, 0.2 on the core. So any variation from there, we could probably see another reaction in the 10-year space as well. Yields pushing back down to the low end of the range for the last week. 247 right now. We did see a high of 254 a couple days ago. When you look at this 247 level, we're pushing back down to about a week ago. We got the 246. So reversing this trend after we got down to those lows of 234 a week and a half ago. We did see the yields push back up to 254 a couple days ago, but now we're coming back under the 2.5 level. A little bit of pressure, particularly when you look at the inflation numbers that came out, and therefore we're seeing prices rise in the 10-year note, and we're seeing yields pushing back down to the lower level of the last week.